Stephen Hillary from LifeDirect, and this is what is life insurance and how does it work? So life insurance is all about making sure that your family or your business has financial support if you're not around anymore. And here's how it works. You pay a regular premium. This could be usually monthly, weekly, or fortnightly if needed. And if you pass away, the insurer pays out a lump sum to either your estate, to the policy owner, or to a business if it's structured that way. The payout is designed to soften financial blow with things like covering debt, covering day-to-day costs, or even, and I see this one a lot, is just buying time so your loved ones can have time to make decisions without having to rush, and that's a key thing. It's not a savings plan. It's not really an investment either, although it can be look and feel like one. It's actually a financial safety net. So if something goes wrong, you've got that backstop to help the family or help the business, and that's what it's for. So in New Zealand, we have what's called term life insurance. It's a little bit different to what it is in other countries. So it's not fixed on a 10-year, 20-year, 30-year term. It's based on what we see as the day-to-day things. You might have needs right now, like covering a mortgage or replacing the income of someone that is in the family. If they weren't here anymore, then the money stops. Or it could be used for looking after children as well, if you were to lose someone. So as life changes as well, that your cover does ebb and flow with you. You can reduce it if you don't have the home anymore, or increase it if you've gone and bought the rental, or your family's growing, or the kids have left. That's the key thing to get across, is that it's not a fixed cover that you just keep and lock away. It needs to move with you through your life stages. So you may have also heard about permanent life insurance. This is a contract that used to be available in New Zealand. It's not really used anymore. However, where it does come, where you might see them is in older policies where they cover you from the whole of your life, and they have a cash fund built into them, and that slowly builds up over time. There are policies still out there, and people do still have them. However, it's just not available on the open market anymore. So here's a real world example for you. You've got a 35-year-old, they've got a couple of kids, it's a typical sort of scenario, and they've got a mortgage. They might take out $750,000 worth of life cover. They have that in place. Something awful happens and they're not around anymore. Those funds can be used to keep the house or clear the debt on it. They can be used for the ongoing education of the children or raising the children, depending on their ages. And it also just may be used to replace the income of the lost person that is no longer in the home. So that's what life insurance is generally. That's what it is in a nutshell. It's about making sure that the people or the things that are important to you can keep going if you're suddenly not there anymore. If you'd like more information or tips on life cover, visit moneyhub.co.nz. If you'd like a quote or further information around your options, visit us, lifedirect.co.nz. We'd be happy to help.